It creeps up on you very slowly, unknowingly, invisible, left out of sight, out of mind, and affects literally everyone and anyone you think of. Something, in my opinion, more deadly than the flu because of its effect not only on a single person, but the entire population. Two words for this unseen menace. And no, it's not COVID-19. It's inflation and retirement. At the age we are now, we take very little of account of inflation and retirement due to our thoughts of it being insignificant or just too far away to think about. But we need to start preparing for it now because it will get too late to fight the effects. Inflation is basically the increase in prices and fall in the purchasing power of money. We look at the prices of movie tickets and hamburgers as an example. 90 to 100 years ago, they were about 5 to 10 cents each. With inflation occurring during those 90 to 100 years, the prices of those tickets and burgers increase, and the purchasing power of 5 to 10 cents will most likely not be able to afford anything from this day and age. Imagine the purchasing power of $5 to $10 ending up like this. According to Robert Farrington, the author of 5 Benefits of Investing, there's an average inflation rise of about 3%. This means that 3% rise of inflation causes your money to lose 3% of its value over time. For the retirement issues, according to Maury Backman, an author for The Motley Fool, about 35% of Americans don't have money set aside for retirement. And those who don't have money set aside are more likely to have difficulty paying their bills or even end up homeless because of their inability to maintain their lifestyle before retirement. As college students, we are nowhere near the age of retirement, so we've rarely thought about what our actions are when the time comes, and most of us would be unaware of the creeping effects of inflation. But there is one solution that can tackle both problems at once. That solution is investing. Invest in common stock. Common stock is like shares of a company. Investing in certain common stock is a good place to hold your money for the long run when you're at a point in your life when you don't need it. Let's say it's 1997. You have $100 and keep it in your savings account for 23 years. Fast forward to 2021. According to a bank and savings expert, Lauren Perez, the average interest rate for a savings account is 0.04%. And in 23 years, that $100 in the savings account will earn you 92 cents. But if you were to invest that $100 in stock, maybe like Amazon, then that $100 would have turned over to $160,000. You should also invest in index funds. They're like common stock, but sold in a group. Index funds have an average rate of return of about 10% a year, which is above the 3% inflation rate and has a higher return than keeping your money stagnant in your savings account. So what I wanted to show you guys as my visual aid is my financial calculator. I use this every day, basically daily, because for my financial class, but I find it really helpful, like in real world applications. So index funds have a 10% interest or rate of return. And let's say we want to make like $1 million. And let's say we just make monthly payments towards that $1 million by investing monthly into that index fund. And let's say I want to do it by the age of 66, which is like the age of retirement. And let's say we start at 0. So if you can see it here, oh, it's backwards, but it's 86.26. So that means $86.26 a month, every month until I am 66. And if I were to invest that at a 10% rate of return, I would have $1 million at the end of my investing portfolio. So only $86 a month. That's not a lot compared to some people's current weekly versus monthly salary as well. And also I want to say, lastly, invest in bonds. According to investor.gov, bonds are a debt security similar to IOUs. Bonds have a lower rate of return than stocks, but still high enough to battle inflation. And if you hold out till the date of maturity, you get the principal of what you paid for the bond and still profit off the interest you have collected. So for retirement issues, according to Diana Yochim, an investing and retirement planning expert, a 401k is like a retirement savings and investing plan that employers offer. A percentage of your paychecks are put in and saved when you are retired. Money from the 401k can be used to invest into stocks in order to increase the value already in the account. And this sets people up for retirement and releases the thoughts of difficulty for paying bills after retirement. dealing with inflation issues, if invested correctly, and retirement funds as well. Now with how young people are, we probably think short-term for our money, like buying shoes, phones, or going out to eat. But with investing and thinking about the long term, your future self will thank you. Because picture this, you're at the age of retirement and you have been investing since at a young age. You don't have to worry about inflation causing your money to lose its value because you've invested in a place where it earns above the inflation rate. And you have a 401k, causing the problems about worrying about bills, homelessness, and comfortability are gone, not only because you've set aside money for your retirement, but you've also invested it, and now you can live very comfortably for the rest of your life. Since we were young, everyone wanted to end up in the situation that I just mentioned. All of us could be one step closer to that reality if we do one thing: invest, invest, invest. What I want everyone to do is start investing. Invest that stagnant money in your bank account that's losing value because of inflation. Open up a 401k and invest your money in there to set yourself up for retirement. Invest in a place where it has a good yield of return, like stocks, index funds, bonds, et cetera, et cetera. It doesn't have to be a large sum of money. You can start with $1 or $2 and increase over time to your comfortability. It's easier now than ever with technology. You can download free stock trading apps like Robinhood or Webull. In a few minutes, you can already be investing. Just start investing now and it will definitely pay off in the future. All in all, with problems like inflation causing the value of your money to drop and the lack of retirement savings causing a weary retirement outlook, it can all be solved by just investing your money. And the difficulty of investing being very low due to free apps allowing the potential payouts to be massive in the future. Many years down the line, when we're all old and wrinkly, finally retired and sitting in our rocking chairs, we will all thank our younger selves for investing in the previous years, not only for current financial stability, but for future years of happiness and comfortability.